You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and indeed beyond, and proceed to pick their brains for the benefit of you, the listener. And next up on the old program is a newcomer to the show and indeed to the network. He is David Taylor, the CTO over there at Exegy. David, welcome to the Options Insider Radio program.
Thank you, Mark. It's great to be on.
And David, as we want to do with all of our first-timers here on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the space and how you found your way to becoming the CTO over there at Exegy.
Well, thank you, Mark. I'd be delighted to. So I did my computer engineering studies all the way through a PhD at Washington University in St. Louis, which has a long and wonderful history in the computer sciences field. And we developed some technology that was applied to high-performance computer networking or computer communications. And that technology was commercialized by Exegy. So the company spun out of the university in 2003. I joined the company shortly thereafter in 2005 and held a number of roles for the company, wrote a lot of the early intellectual property, developed the hardware engineering team, and then eventually became Chief Technology Officer, where I'm responsible for product strategy, marketing, pre-sales engineering, and work very closely with our clients on where the product should go next.
So you were there from the early days, not quite the garage, but pretty close.
The incubator.
Yes,
so there were
the incubator.
10 of us around the table in the incubator, and we're now 125-person company with offices in Hong Kong, London, New York, and our headquarters is still in St. Louis, Missouri. So it's grown quite a bit.
Yes, you know, you always hear the cliche origin story of a tech firm, right? And it's always some guy in his garage in Palo Alto. You guys were in an incubator around St. Louis, but close enough.
That's right.
It's St. Louis,
right.
The new hub for all things market data, St. Louis.
Indeed.
Well, let's get into that a bit. Obviously, you guys play in the market data space. We live in the options space here, so we live in what is technically termed an alt for a lot of the major financial publications and outlets and traders out there. They view all derivatives. They lump them into what I jokingly refer to on a lot of our shows as kind of the alts ghetto. Everything else kind of goes in there. So it could be managed futures, could be options, could be oil wells, gold, whatever the heck you want to look at. It's all lumped into the alts category. But you guys sound like you're expanding your presence in the alt space. So why don't you tell us about that and what you guys have to offer on the alt data side, sir?
Sure. Well, to connect it to your audience in the options space, so when we first built our market data product, the first feed that we processed was the OPRA Consolidated Options quote feed for listed options in the U.S. because that was the test of any market data system. It was by far the largest feed. It still is. And it's a great test of the capacity, the performance, the speed of any system that has to deal with market data. So really from day one, we were in the alt space, if you will, and servicing clients who are in the U.S. options, derivatives space has always been part of our business really from day one. And in telling a little bit more of that story will help you understand how we got into the true alt data space. We came to market with a purpose-built piece of hardware for processing market data, and we called that the Exegy ticker plant appliance. And that had a lot of attraction to both the buy side and sell side because of its high capacity and its speed, and had a lot of uptake initially in proprietary trading and market making, both in equities, options, and other derivatives. And then we eventually got introduced to folks who would run agency businesses, dark pools, ATSs, exchanges. And that's allowed us to grow our business to service a lot of the tier one players on the buy side and the sell side, and foster a very good working partnership with them. And one of the things that we've always done with our clients is once we prove out our abilities, we always ask them, what else can we do for you? What are the things that you do once you receive data from our product that we could absorb into the product, deliver to you as a service, and let you go focus on something that's a bit more strategic? And we've added features to the product that way. But several years ago, we made the commitment to some of our strategic clients to enter into the data science space. So a lot of firms were looking at how to apply things like machine learning, artificial intelligence to build predictive signals of market behavior. And a lot of firms had done that on their own for a while. Some firms were wanting to either play catch up or get it to the next level, and they were looking for help. And we certainly offered our help in that space. And that's how we got into this alternative data space. But we kind of did it very close to the way we got into the market data space. We looked at an area that had very high capacity demands, very high speed demands, where just applying typical software engineering practices just wouldn't fit. It wouldn't get the job done. So we wanted to find an area where our expertise in purpose-built hardware would deliver a truly unique solution. And that's what we've done. So our alt data product basically provides predictive indications on every quote, every trade that flows through our box. So every piece of market data, in addition to having prices and sizes delivered to trading applications, it also has predictions of price movements, indications of hidden liquidity in the market, and those are intended to help clients build more sophisticated trading strategies.
It's interesting because we've seen enhanced data feeds, enhanced analytics, things like that for a while. In the option space in particular, usually what they do is, like you said, they give along the price and all that fun stuff, and then they also add things like the Greeks and implied volatility and things like that. It sounds like you're taking that a step further. You're using those metrics and then implying some sort of actionable data on the other end of it. So do you view this maybe as enhanced data, enhanced analytics 2.0?
Exactly. I mean, depending on how you want to come at it, you could view this as truly real-time analytics. In the way that we would say it's going a step further than doing something like an implied vol calculation or a Greek calculation is that this is actually a predictor. It's not telling you, what the volatility was in the past. This is saying, how long do we think this price is going to be stable going forward? And when it changes, which direction is it going to move? And you can imagine how you could apply that to an underlying instrument like an equity and understand what that implication that's going to have in the derivative markets and vice versa. So we view these as foundational signals, predictors of future behavior in the market. And that future could be a few microseconds in the future, a few milliseconds in the future, perhaps a few seconds. But these are not traditional, earnings or momentum indicators. These are very real time, geared to people who are doing very low hold period trading, who are trying to optimize their execution strategies, people who need help understanding where the market's going to go in a second or two.
I'm glad you touched on that because I wanted to hit on that as well. I'm sure a lot of people, when they hear predictions, they think, oh, here's my $200 price target for XYZ stock over the next 6 months. You guys are not playing in that arena at all. You're playing, obviously, in the very, very sub-second execution realm. And so these predictions, I think, are much, much shorter term, sub-second for the most part, for a lot of your clients. Is that fair to say?
That's exactly right. And that's where we believe it's differentiated. And that's where, providing those kinds of predictions on a real-time basis where every quote or trade is going to update that prediction, that's where our expertise in high-capacity computing really shines.
Now, we've seen a lot of data vendors in the past shy away from this level of enhanced analytics for, I think, a couple of reasons. One of them is liability. They don't want to go down the road of saying, hey, we predict XYZ is going to do this in this time frame, because if it doesn't happen, that opens them up to, shall we say, ramifications from their clients. At the very least, they won't be happy with you because they're looking at that as some sort of trade indicator tool, and it went the other way. Is that something that concerns you guys? I'm sure your lawyers had a field day with this before you put that out, but in an arena these days in the market where everyone is so regulatory, so liability conscious, is that something that concerns you going forward with this?
It's not. And we're very familiar with the stringent regulatory requirements. One of the more basic features of our product is simply computing the national best bid and offer, where our users get to decide what markets are in or out of that view, depending on whether they want a route away view or if they have to declare self-help, et cetera. So we're essentially computing a regulatory reference price for them already. And we've found ways to, of course, limit our liability by providing transparency and control to our clients. Ultimately, they're making the trading decisions. And, if you think about all of the complicated trading infrastructure that is in place in real time, there's lots of layers there, and everybody does their best to ensure data quality and reliability of those systems. But ultimately, it's the trader making the decision about whether or not they're going to put money at risk. So we're providing that same level of transparency, not only in how we deliver the signals, but what their signal quality is in real time. So we actually have a field that comes along with our signals that says what level of quality we believe the signal is today, because a lot of those signals depend on being initialized over time. So again, we found ways and worked very close with our clients to determine what level of transparency they need in order to incorporate this into trading strategies that ultimately put money at risk.
I suppose the short duration nature of these predictions assists with that as well, because at the end of the day, you're not making one prediction for the next 6 months. You're making dozens of predictions every second. So I'm sure if one is errant, there are many more behind that could make up for it.
Exactly. And it's the same type of risk assessment or potential value assessment you make in a market-making strategy that wants to do better than 50%.
So you mentioned cash equities, being able to have this available on that. Which other products can we get these sort of predictive analytics and predictive data feeds available on? Is it on the full suite of Exegy products? I know you guys do a lot in FX. Is it available there, or is it limited to Delta One for now? Where can I get these types of enhanced data feeds on? Which products?
Yeah, so today it is in U.S. equities. The next asset classes it's rolling out to would be U.S. options, FX, and European equities. Really, any market where there's an instrument that can be traded across multiple markets is where our current set of signals shine. And we have a data science team that is always cranking out new ideas. So in addition to taking the existing signals to new asset classes, we will be expanding the portfolio of predictions that we make.
It will be fascinating to see this go live for options because, as you mentioned, for stocks and Delta One products, it's one thing, but options, add many more layers to the cake there. They have the volatility of the Greeks, they have the order book, they have the open interest, they have what's going on in that second, they have the skew, all these many different and varied inputs into the calculation that don't really exist in the equity side. So I will be very excited, David, when this goes live for options to kind of dig in and sink my teeth into a little bit and see how these predictions unfold, because that's a difficult beast to tackle. So I wish you well with that, David.
I appreciate that, Mark. Maybe we'll come back and tell you about it.
Well, let's talk about some of the other things you guys have cooking over there as well. I mentioned FX. I know that's a big area for you guys. You have actually a trading platform over there at Exegy. Why don't you give our audience a little bit of an overview of what exactly you guys offer in the FX space and what you're doing over there for FX traders right now at Exegy?
Right. So the best way to think about it is again, purpose-built hardware system for market connectivity and aggregation. So we, in all the trading venue connections, both the data side as well as the order handling side, into our appliance. And that can be both ECN-style venues as well as other liquidity providers, banks, et cetera, and allow the users to connect to our appliance, get a bespoke view of added pricing, especially for various spot prices across currency pairs, and then enter their order through the same logical interface to our appliance, and those orders can go to any of the venues that they're getting pricing for. So we deploy those appliances, we monitor them and manage them on behalf of our clients. So a typical deployment would be to have a resilient set of appliances in New York, London, and Tokyo to support a global FX business.
And you guys obviously live in that low latency side of the data space. You know, we've talked for years on this network, particularly on our tech show, about the cliche of the race to zero and how that's unfolding in the space. In the last few years, we've seen an evolution to that race where not as many firms are out there really competing on that bleeding edge of latency anymore because the costs were just prohibitive to keep up that race, and instead we're switching to new strategies that were less data sensitive or maybe new products. You guys live on that bleeding edge. I'm curious, what's that been like for you guys over the past few years? Have you seen a similar shift, or do you think that the bleeding edge of the race to zero, that's still alive and well, and there's still a lot of firms out there fighting to be on the cusp of the lowest latency possible?
I think the race has definitely changed over time. There was certainly a shakeout where the race to be, the leading market share market maker for listed derivatives or equities, that has certainly consolidated in some of the top firms that just have deep technology expertise and teams and budgets to support that ongoing investment in the lowest possible latency. One thing that we have seen, which, of course has been pleasing to us, is that more and more firms are realizing that even if they're not going to be in the nanosecond race of making sure that they can get their orders on the wire often, before the market data even arrives, that they need to be respectably fast, if you will, or fast enough or credibly fast, we've heard it described a number of ways by our clients, to show that on the agency side that they're providing the best possible executions, that there are not other firms out there getting a better view of current pricing than they are, or firms that even if it's not a market-making strategy, there are still a lot of different speed-sensitive strategies that are profitable. And they've decided they don't want to invest the amount of time and money it takes to keep that technology current. They'd rather take it from a best-of-breed vendor. And that has certainly expanded the clients who are latency sensitive. We have seen clients who we would not have expected to care about microseconds or even nanoseconds starting to talk to us about that level of performance and looking at expanding the number of applications that get data at that level of performance.
Interesting. So the audience for you guys is actually expanding rather than contracting. I suppose a good thing in your business there, David. Well, speaking of your business, you guys were chosen last year to become part of the CAT, of course, the Consolidated Audit Trail, which is in and of itself a very contentious issue in the financial market. Some people think it's a bridge too far. Some people think it's onerous and many other things out there. I'm curious, give us an update on that. You guys became a part of it, I believe, around September or so of last year. What is the status of your efforts with them, and is it proceeding as you guys expected?
So it's absolutely an honor, actually, for Exegy to be a part of that. We are providing data, specifically recorded market data, to perform the various types of checks that are part of the Consolidated Audit Trail. We began our efforts working closely with Thesis when they were the operator of the CAT. As everyone knows, that responsibility has transitioned to FINRA, and we are working closely with them to talk about how we might continue working with them and perhaps even expand our role. So from our point of view, our focus is to provide the highest quality data to make the CAT infrastructure as robust and capable as it can be. As a vendor, we of course have clients with a wide variety of views on the merits or lack thereof of the effort. But I think it does showcase our ability to be part of a mission critical piece of market infrastructure, and we're happy to do it.
We had the folks from Thesis on the network way back right when all the heat really came on them after all of the credit reporting data hacks happened, and all of a sudden the notion of a central repository for all of the market's data became under a lot of fire. And I could tell just from talking to those guys at that time that was a bit of heat that they maybe weren't planning on dealing with. As you mentioned, FINRA now having to deal with that probably makes a little bit more sense in that regard. But interesting things going on that front as well. You guys are working on a lot of interesting things over there at Exegy, David. But before we go, if there's something, you say to yourself, I forgot to mention this. Maybe you want to leave our audience with a little bit of a hint, a little bit of a tease of what they can expect from you guys at Exegy in the coming months. Now is the time, sir. The floor is yours.
Yeah, I would say the things that you should expect to hear about from Exegy in the next 6 months would be just continued geographic expansion. So we're investing heavily in our Asian office. That we'll have more deployments in Asia and more locations, which is, for a lot of firms that we've worked with, an area of renewed interest and investment, and we're there to support them in that. And, we talked in this program about speed, and you will see announcements from Exegy just taking our products to the next level of speed and really offering to the trading community the ability to have the lowest possible latency solution as an off-the-shelf product that's managed for you. So we are looking to narrow, if not eliminate, that gap between what's possible from a vendor-supplied solution and what's possible if you have your own deep technology bench of hardware engineers and software engineers.
And David, if folks want to learn more about what you guys are working on, where should they go? What should they do?
So certainly you can go to Exegy.com. That is our website. It's easy to get a hold of us there. You can see all of our announcements and information on our products. And that's where I'd point you. We'd be happy to talk to you.
There you go, Exegy.com. That's EXEGY.com, listeners. And David, good luck on implementing this alt data. We'll look forward to seeing it implemented in the options market very soon.
Very good. Thanks for your time, Mark. Appreciate being on.
The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
All right, David, you did it. Well done.
All right.